Hey everyone! Today we're diving into the latest inflation numbers for January 2025 and what they could mean for the Fed's next move. You might have heard a lot about inflation recently, so let's break down the key points. First up, headline inflation. The PCE price index, which tracks a broad range of goods and services, rose by 0.3% in January. This puts the annual inflation rate at 2.5%. Not too shabby, right? Now let's talk about core inflation, the Fed's favorite measure. Core PCE, which excludes food and energy, also increased by 0.3% in January. That brings the annual rate to 2.6%, down from 2.9% in December 2024. The Fed likes this measure because it's adjusted for changes in consumer behavior. So what's the Fed thinking? Well, these inflation numbers met expectations, so it's likely the Fed will hold off on any interest rate changes for now. But interestingly, futures traders have slightly increased their bets on a June rate cut after seeing this report. Let's talk about personal income and spending. Personal income jumped by a whopping 0.9%, way above the 0.4% forecast. But spending? It fell by 0.2%, against predictions of a 0.1% gain. As a result, the personal savings rate rose to 4.6%. People are being cautious with their money. Looking at goods and services inflation, we see some interesting trends. Goods prices climbed by 0.5%, driven by motor vehicles and parts, which rose 0.9%, and gasoline, up 2%. On the other hand, services inflation was milder at 0.2%, with housing up 0.3%. You might be wondering how this compares to the Consumer Price Index or CPI. The CPI showed a 3% headline inflation and 3.3% for core inflation in January. While the public often follows CPI, the Fed prefers the PCE measure. And lastly, the market reaction. Stock futures indicated gains after the report, while Treasury yields were mostly down. Investors seem optimistic about these numbers. So, there you have it. The latest on January 2025 inflation and what it could mean for the Fed's next move. Keep an eye on those savings and spending trends, folks.